Thank you for joining us. I'm Armando Gutierrez Jr. with this Markets.com Bailout Update. Early Tuesday morning, the Bush administration unveiled measures to allocate $250 billion into the nation's financial system in what turns out to be the biggest bank bailout in the history of the United States. The plan apportions more than one-third of the $700 billion authorized by Congress on October 3rd towards equity purchases. The $250 billion will go towards the purchase of preferred shares in qualifying banks, with a $25 billion or 3% risk-weight assets limit for each financial institution. In its latest attempt to unfreeze credit, the Treasury plans to invest $125 billion into the nation's largest banks, with the remaining $125 billion going towards other banks. Regardless of the state of their balance sheet, Treasury Secretary Henry Paulson insisted all banks accept government stakes for the sake of the U.S. economy. The $125 billion invested in the country's largest banks will be allocated as follows. Citibank and J.P. Morgan Chase will each get $25 billion. Bank of America and Wells Fargo will each get $20 billion, along with an additional $5 billion each for their acquisitions of Merrill Lynch and Wachovia, respectively. Goldman Sachs and Morgan Stanley will receive $10 billion each, with the Bank of New York and State Street each receiving between $2 and $3 billion. Paulson, who said, quote, "We regret having to take these actions," hopes the banks will accept the capital and use it to boost lending. Because bank injections will add much-needed capital to financial institutions, experts expect that it will bolster confidence in the market and their counterparties. Participating banks will need to accept the limits on executive pay, as well as give the Treasury warrants for 15% of senior preferred investment, which will pay a dividend of 5% for the first 5 years and 9% thereafter. The banks have until November 14 to apply for the government purchases. The Federal Reserve announced that it will purchase massive amounts of short-term debt in the form of commercial paper, a crucial step to ease lending for companies needing to pay workers and buy supplies. This morning, President Bush requested an additional $100 billion to buy troubled assets from firms. Bush also announced insurance on all deposits in bank accounts bearing no interest. Previous plans to just buy bad mortgage debts off of Wall Street firms and major banks did little to restore confidence in the markets. As U.S. stocks had their worst week in history, over the weekend the administration used the authority granted by Wall Street bailout package to make the direct investments into the nation's banks, and a move that followed steps already taken by European governments last week. Monday's historic jump in stocks was overturned Tuesday after the government's announcement to pour the $250 billion into banks. More than an hour after the opening bell, the Dow Jones fell 0.8%, the S&P 500 fell 0.9%, and the NASDAQ Composite fell 2.9%. That will do it for this Markets.com update. I'm Armando Gutierrez Jr., and thank you for watching.